China has gone through a very challenging 2020, and since the outbreak of COVID, China has gone through a very difficult time right at the beginning of the year. Now, we know that China's GDP had a minus 6.8% growth in the first quarter, but the momentum started to pick up in the second half of the year, and we're actually expecting a very surprising positive growth in 2020. And also we expect that the growth momentum will extend to 2021. And currently our forecast is around 8 to 9% growth of the GDP in China. And bear in mind that because of the first quarter growth has been negative as in the 2020, so the first quarter of 2021 will probably see a double-digit growth, which will impress, in terms of the headline growth number, very impressive growth number that we expect to see in 2021. So from growth perspective, that we don't actually see any problem from China, but more about how China is going to navigate through a very difficult external and domestic environment. How the China-US relationship will play out remain the biggest question the market is asking. That's obviously a big uncertainty under Biden's administration. So far, we have not heard a lot about how Biden is going to treat China. Now, what we know is that China will continue to commit to phase one deals and some other commitments China has agreed with Donald Trump in the past 2 years. But what we don't know is how the US will going to position China in the under the new administration. So I think this will continue to be a big factors that will drive financial market volatilities in the new year. And of course, that this is very often is just a piece of noise in the financial market. Look at 2020's experience that China exports continue to be very performing, especially in the second half of the year that China has seen a boost of export because of a lot of demand for electronic products and the work from home demand, as well as the medical supplies from China has been very impressive in the second half of the year. So next year, I think that the uncertainty between the US and China will continue to affect the markets in terms of more about the market volatility rather than economic fundamental. Now, in particular, I'm more concerned about the deleveraging story of China. Obviously, the central bank's policy of China is very different from the rest of the world. That the People's Bank of China continue to stick to a very disciplined monetary policy, whereas other central banks in the world has already pushed the interest rate to zero. Now, this is a very interesting phenomenon that attract a lot of flow, capital market flow to China in 2020. Now, what about 2021? If China they know that they don't really want to use a monetary policy easing to support the economy, and then the focus is increasingly shift to stabilize the financial market and also to curb financial risk. So the structural deleveraging story will come back again, very similar to the story of 2017 and 18 story. Now, if the Chinese government trying to proceed with this structural deleveraging more proactively, and we're going to see more corporate defaults and to clean up the zombie enterprise. So that's involved a lot of spillover effect to other sector in the financial system. Now, of course, that our bottom line is that we don't actually see that China will have a financial crisis. But if the government proceed with the structural deleveraging with any error or misstep in their policy, then that will probably affect the sentiment in the financial market.